And welcome. What do I mean by the market is waiting? The market is waiting to see whether or not the Fed lowered the rates in order to control inflation. And it seems to be working. It seems to be working that the Fed is actually lowering the rates and has got inflation in check. Now, is this going to continue? Or number two, is the Fed doing it for political reason? Is the Fed truly independent? Why I'm saying that? Because there's been talk within the Fed, look at some of the previous videos, that quite frankly, there is some dissent at the Fed. They thought that 50 bips was too much. Why? Because some of the people at the Fed, some of the president of the various Fed locations feel that inflation is not totally under control. And if that's the case, and you keep lowering the rates for whatever reason that is, you will potentially give rise to inflation all over again, like it happened in 1970s and the 80s, and it was a disaster. We had recession, we had inflation, and it took like 15 years for the market to get back to normal. Okay, so it's a pretty big deal. In addition to that, we potentially have a recession on our hands because the Fed has never done it. It has never been able to control inflation and not create recession. Only once it's been done. And once unemployment starts to go up, we're around 4%, it takes a while to, it doesn't go down. It keeps going up maybe 4, 5, 6%. And we really don't know what's going to happen next because it takes several quarters before any rate decrease will have an impact, and vice versa, which means that when the Fed raised the rates around 10 quarters ago, we are now going to feel the impact. Meaning what? Meaning we're going to start to slow down, because that is the reason behind the increase in rates, right? To slow the economy down. It doesn't happen right away. So that's kind of the big picture. I don't know. What I mean by I don't know, I really don't know what's going on the ground. That I can't tell you, because no one knows what's really going on. All we know is we kind of look at the past, we kind of look at the data, and we kind of make up our mind on it. Now, why do you care? You care. It's important for me to explain to you. You care because this is what's going to move the stocks, right? If the market tomorrow feels, you know what, we have a recession coming, sure, you lower the rates because of the recession, and you may not have this inflation under control. Oh my God, you got both of it at the same time. It's a disaster. Therefore, we need to get out of the stock market. And you could potentially lose your job too, because if there's a recession, guess what? We're in trouble. Then again, maybe this is not what's happening. Maybe at the end of the day, they were able to manage inflation. A lot of the economists are saying, listen, I'm not seeing anything. I've showed you a couple of videos on that. I'm not seeing anything. I am not seeing a particular decrease of any kind happening. Yeah, there is some slowdown in the economy, but so what do? Well, we look at the data every single day. Yes, we got a 50 bips decrease in rates, but I don't know about you, but when I look at the stock market and I look at the SPY, I frankly, how is it doing? How is it going? I don't know. Since September, it's been going up, but we're making new highs. Right, of the past, let's say September 18, that's when he basically lowered the rates. September 18th, nothing happened. We know we opened at 563. By 519, we open at okay, on the 19, yeah, we went from the 560 to the 570. That's when we had a beep. So we had like this nice bump on the 19. But then on the SPY, we're back down again, to the 571. I mean, the market is not like exploding of joy and happiness because we've got 50 bips. The market is basically saying, which is what I've been saying as well, is I'm a child and I want more rate cuts. Okay, if the Fed is correct and there's no recession coming and inflation is under control, then we have a bull market. But we don't have a bull market yet. It's the market is saying, hold your horses, hold it, hold it. Let's see what happens next. And this is what we're going to be doing for the next 2 weeks or so. I'm not even talking about the election because that's like the cherry on top. Because that creates more volatility. The point is now we need to see what's happening. Well, what's happening? Well, I don't know. Today, consumer confidence came out, and guess what? The latest index reading from the conference board was 98 below the 105 seen in August, which is lower than the 104th economist survey by Bloomberg expected. The drop in consumer confidence from August to September was the largest decline since August 2021. Oops, confidence is going down. Now, what did the market would do with that? All right, market could have gone higher, but because of that, they're saying, well, it's confidence. Let's see. But if it's below 100, you might have a situation on your hands. In addition, Case Chiller. Case Chiller came out. And basically, home prices are up a lot, 4.5%. Let me get you some numbers here. But basically, Houston, we may have a problem. I mean, it's not a bad problem to have, but home prices are up 4.5%. What does that mean? Well, like I said, there's two economies, right? The haves and the haves not. The haves, well, the stock market is not crashing. The stock market is going up little by little. Still, I'm making money. My house is worth more and more and more money. So I'm great, right? So you have those people. Then you got the other people saying, what? Inflation. Look at the price of food. I don't care the CPI. I don't eat with the CPI. When I look at the CPI, when I look at my food, look at my insurance, and I look at my rent, it's going up and up and up and up and up. So don't tell me that things are great. Things are not that great for me. So, and that ties into the elections, by the way, but we're not going to get there because then it gets too complicated. But the point is, for you as an investor, for you who's trying to make money, for you who wants to take advantage of the situation, what do? Well, first of all, you want to subscribe to my channel and you want to like this video so I could send you more of that information. And don't forget, every day I also send a morning markets to tell you what I think is going to happen and what's happening and what you should be worried about. Anyway, so what is it that you should be doing in a case like that? Well, first of all, we understand the context, right? And the context, quite frankly, is we're waiting to see what's going on with the economy. And, prices are going up still in housing. And what we want to know also basically is that soon, towards the end of the week, we're going to have some CPI numbers and we're going to be listening some PCE numbers, some inflation number. That's the number everyone is going to want to see. That's the number everyone wants to worry about. That's the number that's going to make a big difference for everyone. So I believe on Friday, there's 71 economic events. And in the US, we're going to have the Dallas Fed PCE. That's going to be the one that's going to tell us whether or not we got the inflation under control. Because right now, the PCE is kind of doing like that, and it was kind of flat. So I don't know. Is it going to keep on doing it? Are we going to have a problem with it? I don't know. I don't know if we're going to have a problem with it. But the point is, we're going to see if we got this under control. In addition, you have the University of Michigan conditions. the Michigan conditions, the core PCE index, the PCA, the consumption, the personal income, the core PCE, the PCE price, the personal consumption. I mean, you got a lot of stuff coming out. And the U.S. Michigan sentiment final. So we've got a bunch of things coming up over the next few days. That what do we have? That's Friday. So Friday, you may want to hedge your portfolio and do a few things here. On Thursday, we've got you got durable export, core PC. You got some core PC prices. You got the GDP on Thursday. Oops, that's going to be interesting as well. GDP sales final. So there we're going to see, and that's coming out around noon. I mean, no, GMT. I think it's in the morning. And then on Wednesday, what do we have? On Wednesday, which is tomorrow, new home sales, mortgage market. So Thursday and Friday. Thursday and Friday is what you want to focus on. Thursday and Friday is what you have to worry about. So what should you do? How do I make money in this market? Well, first of all, I've always said, you want to buy when everybody else is selling. How about Nvidia? You want to take advantage of the market. You want to take advantage of that volatility. How about options? Remember that options that I put together? You know that options that Nvidia 24, December 24th, it's up 33% in one day. Why? Well, because Nvidia went up. Nvidia went up. A couple of days, we had the same situation with Tesla. Tesla and Nvidia, very volatile, although Tesla and Nvidia is getting beat up. I mean, before I do anything with Nvidia, I wait until it gets beat up, like now, and now, of course, it's too late. Right? So what you want to do is you want to take care of those options way before, when nobody's paying attention. What I recommend is you start to take a look at some of the Greeks. I know. What do you mean by the Greeks? Well, whenever you buy an option, what you want to take a look at is something called, you go into the option tracker to make sure you understand what you're buying. Obviously, this is important. But let's say if I look at the Tesla January 17 call, right? So if I look at that, right now you want to take a look at the implied volatility. It's 57%. That's very high. What that means is that it takes a lot for the stock to go up in order to move. Whenever it's above 20%, you better be careful. So, like, I would stay away from a Tesla option 360 call, right, from January 25. What about the SPY 630 from June 2025? There, the implied volatility is much lower, so you might want to take a look at that. But then again, this is a June 20th, 2025. That's great. I mean, this is a kind of opportunity I would do in case, in 3 months from now they realize, oops, we have a recession. So that could be interesting. It wouldn't take much to move that stock, that option, but I mean, then again, it's really long dated as well. We have the December 31st 570 SPY, which makes money today, makes 3.9% on the S&P, and that, my friends, has an IV of 13%, right? So these have, the SPY is probably a better, you also have the put. If you really think in November 15 of this year, 540 put, here the IV is 18%. So these seems to be, what about the Tesla? The Tesla call for December of this year. December call, the IV is 58%. That means it takes a lot to move Tesla. But then again, Tesla is volatile. What about the Nvidia December 20th at 155? That is at 50. That's high. So a lot of things right now, it feels to me. It feels to me if you're going to play the game of the option, you probably want to get into SPY, which tracks the stock market, tracks the S&P, and at least you have a chance of some consideration, some gain. I mean, 3-4% a day. Hey, listen, it's not too bad. You could make $300-400 a day. You have to go worry too much about it, right? I mean, I don't know if you have $10,000 to invest. 1% of 10,000 is $100, right? So 1%. So it went up 4%. You can make $400 every day. Boom, 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 boom. That's not bad. That's not bad at all. But then again, understand the risk of options. Now, what else can you do? Well, if I take a look at some of the other stocks that I've recommended in the past, IFF, I mean, frankly, they're not moving that much in one day. I mean, I'm not seeing something extraordinary with stock, but the market is not moving anywhere, right? What else do we have? What about my portfolio of my holdings of small stocks? What do we have here? Um, we have the small caps. What about the small caps? Small caps today, ACMR was up 1.6%. Power was 1.6%. So you've got VMC overall daily gain, total gain. Well, right now the one that's doing very well at 29.7%. Let me show you. It's POW. What is POW? Well, it's Powell Industries. Powell Industries the past 5 days has been doing is moving. I don't know what's going on there, but it's moving. It's moving because seeing price strengths have a high chance of carrying the momentum forward. Here's some good momentum. Powell Industries, the makers of trucks. Take a look at that. It's looks like it's been moving up. So what does it mean for you? It means that you need to start thinking about how you want to take advantage of this market. And it's not always very easy because the market is always moving. Okay. So what are we doing at the end of the day? So we're going to be monitoring what's going on with the Fed. We're going to be monitoring what's going on with the economy. Now, how do I monitor? Well, obviously, subscribe to my channel, and I'll tell you every day. But if you listen to other people, make sure you understand the players. What do I mean by that? Well, if you have a portfolio manager that's talking to you, yeah, they love talking. You listen to the portfolio manager. The portfolio manager has a bunch of names in his portfolio. Therefore, he will tell you or she will tell you what they like and what they don't like. They will tell you that they like the stock that's in their portfolio because that's what they have. Therefore, you will say, well, I mean, if they like NVIDIA, let me buy NVIDIA. Be careful because you don't know what else they have. You don't know how they're monitoring their portfolio and how they're hedging and how they're offsetting the risk. Be careful. You don't know, right? If it's someone from the network, well, if it's someone from the network, they will invite usually a pundit. Like you have Danielle DiMartino Booth, which I think is excellent. She's always saying some very interesting thing about the Fed. But again, for if they tell you, everything is great and everything is going to be fantastic and nothing is going to happen, then what do you need them for, right? So you have to be careful also. Not that they're incorrect, but you understand that they will tend. I mean, some of these people have been saying for a long time that we're going to have a recession. I am still not seeing it, but it's coming. We shall see. But having said that, even if we have a recession, they're not gonna allow a stock market crash. I don't know if you know, but in 1987, it took a while for the market to come back. It took a very long time in 2000 for the market to come back. It took less time in 2008. When we had the stock market crash, it took even less time in 2020. Much less time. So what do you do with that information? Well, I mean, you know what? At the end of the day, I think it's okay to take a risk. It's okay to think that you're going to get away with it. It's okay. Assume that the market is going to keep going up. Because even if it doesn't, if you have some recession news, guess what? Then they'll double down on the rates, right? And frankly, it's great because if you're doing what I'm doing, which is option and stock, mostly options, you're going to play the volatility, right? The market is going to go up again. Join my Patreon channel if you want to see my trades. You want to see what kind of trades I'm putting on. Like right now, I got a bunch of puts waiting in the corner, waiting in the forest, waiting for the thing to come out to grab it. Okay, not doing so well right now, but I'm not out to make a buck every day. Well, on average, I want to make $400,000, $500,000, $600,000 a day. I'm not looking for a lot of money. Slowly learn the market, understand what's happening, see who the players are. That's important. No, I'm not saying don't listen to them. It's okay to listen to them. It's okay to understand what they're saying. It's okay to see what's happening, but understand what they're doing. Understand the situation. Okay? So that's what we're going to do here. We are going to monitor the market. We're going to take our position and make some money. And most importantly, we are going to be educated and understand what's happening. You can take that to the bank.